The intrinsic value of a company is an estimate of its true worth, taking into consideration various financial factors, such as its earnings, assets, liabilities, growth prospects, and risk profile. Here are several common methods used to calculate the intrinsic value of a company. Discounted cash flow, DCF, analysis. This method involves estimating the future cash flows of a company and discounting them back to the present value using a predetermined discount rate. The discount rate is typically based on the company's cost of capital or the required rate of return for investors. DCF analysis requires making assumptions about the company's future cash flows, growth rate, and discount rate, and it can be complex and sensitive to changes in these assumptions. Comparable company analysis, CCA. This method involves comparing the company's financial metrics, such as price to earnings, PE, ratio, price to sales, PS, ratio, or enterprise value to EBITDA, EV/EBITDA, ratio, to those of similar publicly traded companies in the same industry or market. The idea is that similar companies should have similar valuations, and the intrinsic value of the target company can be estimated based on the average or median multiples of the comparable companies. Net asset value, NAV, analysis. This method involves valuing a company based on its net assets, which is the difference between its total assets and total liabilities. This approach is commonly used for companies with significant tangible assets, such as real estate or manufacturing companies. NAV analysis may also involve adjusting the book value of assets to reflect their fair market value. Earnings multiplier method. This method involves multiplying the company's earnings by a predetermined multiplier to estimate its intrinsic value. The multiplier can be based on various factors, such as historical earnings growth rate, industry norms, or comparable company analysis. For example, if a company has earnings of $1 million and a predetermined earnings multiplier of 15, the estimated intrinsic value would be $15 million. Fundamental analysis. This method involves a comprehensive analysis of a company's financial statements, including its income statement, balance sheet, and cash flow statement, as well as its business model, competitive advantage, management quality, and industry outlook. By analyzing these factors, an investor can form an opinion on the intrinsic value of the company. It's important to note that estimating the intrinsic value of a company is not an exact science, and different methods may yield different results. It requires careful analysis and judgment, and it's recommended to consult with a qualified financial professional or conduct thorough research before making any investment decisions based on intrinsic value calculations. Thank you for watching. Please like and subscribe.